Hello and welcome to today's live talk brought to you by Bayer. Today is Earth Day with the motto "For Our Earth," and we're asking today how investors can contribute to doing just that. My name is Melinda Crane and it's my pleasure to accompany you as moderator. Ladies and gentlemen, transitioning to a sustainable growth model requires a far larger volume of green investment than the market is currently generating. The World Economic Forum recently estimated the shortfall at nearly 2.5 trillion euros a year. So clearly, finance has a major role to play, and recent developments indicate that at least some global financial players are stepping up. Since last year, the world's largest asset manager, BlackRock, is putting environmental, social, and governance, so-called ESG priorities, at the forefront of its investment approach. So when money talks, corporations listen. But is the sector as a whole talking loud enough? Are markets correctly pricing climate and environmental risk? Do we have the right standards for assessing companies' ESG strategies? And what more can and should policymakers do to unlock green capital? Those are some of the questions we want to discuss with today's guests, Janne Werning and Matthias Berninger. Janne is head of ESG Capital Markets and Stewardship at Union Investment. It is the investment arm of the DZ Bank Group, which is the second largest bank in Germany. And in that capacity, he oversees integration of environmental, social, and governmental factors into Union's investment strategies. He joins us from Frankfurt. A very warm welcome, Janne.
Thank you very much.
And I'm very pleased to welcome back a regular at these live talks, Matthias Berninger. He, since 2019, has been serving as Senior Vice President for Public Affairs and Sustainability for Bayer. Or if you're in the USA, perhaps you say Bayer. He's responsible for shaping Bayer's ESG strategy and for realizing the corporate ambition of helping more people thrive within the planetary boundaries. He joins us from Washington, D.C. Hello, Matthias.
Hi, good day, good morning from my side.
Great to see you again. Ladies and gentlemen, before we start our discussion, just a quick word on how you can participate. Please use the comment function on this live stream for that purpose, and I will bring in your questions a little bit later on. And to reflect what we're also hearing from you, let me get us started by referencing a poll that we did in the run-up to this webcast. We asked whether those surveyed were investing in shares, funds, or ETFs, and whether they looked at ESG factors, those environment, social, and governance factors, when they did so. And here's the result. 48% of those surveyed said no, they're not investing in such financial instruments. Those who are financing said 31% said yes, but not with reference to ESG factors. And just 21% of those surveyed said, yes, they're investing, and yes, they're looking at ESG, environmental, social, and governance factors. So clearly there is some room for improvement here. Let me begin by asking Janne and Matthias to give us their take on that. So Janne, not too long ago, one of the first terms that would turn up in practically any internet search on finance and climate was greenwashing. Are we seeing a real change now in the degree that investors in general and the financial sector in particular are taking ESG seriously?
Yeah, thank you, Melinda. Very good question. To some degree, I probably would agree. 10 years ago, 20 years ago, not many companies, not many asset managers in the financial industry took ESG too seriously. But of course, Bayer is well acquainted with that problem. I think it's fair to say that many companies did not take climate change seriously until very recently. And that was certainly true for the financial sector, for many sectors, including the chemical sector, pharmaceutical sector. And there are many reasons for that. I don't want to go much into detail, but let me shortly introduce Union Investment. We've been investing in ESG, started 30 years ago. So our first ESG fund was established 30 years ago. So we have a lot of experience with that. We were at the forefront of integrating environmental, social, and corporate governance factors in the investment process. And as you just mentioned, BlackRock and the study you just gave the results is one important point with regard to climate is of course coal investment. And I'm very happy to say that 2 years ago, Union Investment started to exclude all coal miners, coal producers from all of our investment funds. So we took climate change and we took CO2 emissions seriously for all of our funds. And I think that's quite important.
Yeah, you are on mute though.
Excuse me, I was on mute, but here I am. Hopefully I can now be heard. Sorry about that. Matthias, you yourself said that the invisible hand of the market is turning green, but according to the little survey that we did, apparently not all investors see the shift in color. Would you nonetheless say that a decision like BlackRock's marks a sea change?
I don't want Janne to show his hand, but since I joined Bayer, we had lots of conversations, lots of exchange with Union Investment, with many others. And it's always like when you are a company, there are like two camps. One camp says, well, they don't really care about it. They just say it in the public. And the other camp kind of takes it more serious. And in the conversations we had, it was pretty clear that for a company like Bayer, it's absolutely necessary to focus on the topic of sustainability in a very diligent way. So Janne is one of those people who talks about this topic also in the kind of big room conversations that shareholders have with the companies they're invested in. Let me say a general trend, it's a very simple trend, is that the people who are investing are changing. The generation of the baby boomers extracts what they have invested in the past, and the next generation around the world with different values, different views, invest. So I think the general trend will increase just from the people who put their money behind companies and entrusted people like Janne. They will take care more about the environment simply because it's a topic that's dear to their heart. Is it 100% black and white? Certainly not.
I said at the outset of my remarks that when money talks, corporations listen. Would you say from your experience at Bayer that decisions like BlackRock's resonate with corporate management? Do they make a difference?
If it was only BlackRock, people would say, well, it's just one company or it's just like Davos talk, but it's not only BlackRock. It's, in the case of Bayer, the majority of the companies that are invested in us that wants us to make progress on decarbonization. So it's not like one company only. It's a real trend. It's a trend that's also supported by central banks who basically want to make sure that the way they finance the financial sector and support the financial sector is more sustainable. That's why it's an invisible hand of a market that's turning green.
Janne, you were quoted in the German economic daily Handelsblatt last year as saying that you expect climate change will have an ever greater impact on company valuations. Why? What's driving this development? Is this more about fear, risk, or about opportunity?
Yeah, good question. I think a lot has changed over the past 2 to 3 years, politically, economically, but also physically. If we look at the political side, and I know it's Earth Day today, climate change is finally taken seriously. Not many people would have imagined 3 years, 5 years ago that we now have the EU, China, and the US finally under Biden that has or is aiming for net zero emissions by mid-century. I mean, this is a huge political change. And then, of course, we have the economic shift. Climate change mitigation is finally profitable in many economic areas. So solar, wind is finally cheaper than coal. And that was a huge argument 5-10 years ago. And as soon as we reached that changed a lot economically. And then, of course, we have the physical impacts. You can see it. We already talked about that. Climate change on first hand. We have the extreme weather events with flooding, with droughts. Climate change is real and is it has an impact on the companies, and that's why it also has definitely an ever greater impact on the company valuation. And let me just finish one quick sentence. What we always quote is the World Economic Forum. 10 years ago, they published a world risk report, and they did that again 2 months ago. And the 5 biggest risks from the World Economic Forum, and don't confuse the World Economic Forum as Greenpeace, are climate risk, are environmental risk. So you can see that an institution like the World Economic Forum is also saying, please have a look at climate change, have a look at the risk there.
An audience question has come in that references the study that I quoted, or the little survey that I quoted earlier. So let me bring in this question and then ask both of you to talk a little bit about the real nuts and bolts of ESG investing and also of assessing these factors in terms of investment. So the audience remark is this: currently ESG is nothing more than a marketing gimmick regarding investing, since there are no real rules for evaluation. The study or the survey that I noted proves it, says this questioner, and then asks, what rules should be used for evaluation? So let me ask you, first of all, Janne, tell us a little bit more about exactly how you at Union Investment are analyzing firms' ESG strategies, and what are the benchmarks or standards that you use to do that? Would you agree that there are no clear rules here?
Certainly no, I would not agree, and I would also not agree that it's ESG is marketing. It's certainly true for some asset managers around the world that have, for example, coal companies in their ESG mandates, and then you can talk about greenwashing. That's right. But talking about Union Investment, our sustainability research is guided by internationally recognized code of conducts, such as the UN Global Compact, as the UN Guiding Principles on Human Rights and Business, but also the Sustainable Development Goals. And to assess those topics, we have a huge active in-house research team that looks at the topics, but also use the most recognized ESG rating agencies for our scoring. And you can say that there are certain fixed standards and guidelines that a company should follow and is not allowed to violate, because then they are excluded from the ESG funds. But let's come back to climate change. Of course, climate change is much more difficult to assess. It's not so much about guilty or not guilty, but it's about transformation. It's about looking at a company and the progress they're making. It's about not so much how much CO2 emissions they had in the past, but for the path they are going in the future. Are they able to reach CO2 neutral targets? Are they able to reach net zero targets? And that's the question ESG is way more looking at the environmental side today. So that's a very important point.
Thank you very much. And then over to Matthias. As an impact generator, which is part of Bayer's mission statement, Bayer does aim to make a measurable contribution to the global sustainability goals. Can you tell us what your benchmarks, what your standards and strategies are in trying to do that, and how you, for example, bring in assessment measures like the UN Global Compact, for example?
So first of all, what we do is we listen to the kind of standards of our different investors, and those who have reached standards inform our strategy. So case in point, Janne and his team have worked on how they want to see remuneration being included. And if you compare what the standards are of Union Investment with how Bayer included quantitative measures in the remuneration, you will see a lot of resemblance. That's not by accident, but by us listening 2 years ago, 2.5 years ago, to where the trend is going. So that's the first point. The second point is governments are setting a standard. So New Zealand just this month decided that they have one of those reporting standards to be the thing that is mandatory by law. The European Union discusses about that. The Biden administration currently talks about that. So I think it would be really good to clarify what the rules are. But what we are doing at this moment in time is we look at those that are credible and try to cover all of them in our sustainability report. That's why the sustainability report is not necessarily a piece of literature. Yeah, it's more something that tries to reflect the reporting requirements of the different standards. For business, small and big, who are looking for investors, I think it will be a precondition to be transparent about the impact they are having. And then, of course, the question for a company like Bayer was a 5.5 billion euro R&D budget and a very strong position in health and in nutrition is, are we really changing what we are doing as a business towards accelerating the path to achieving the global goals on sustainable development?
Let me go back to Janne now. And Janne, in 2 recent interviews with German media, you said that, in your opinion, Bayer as an agricultural company is not fulfilling sustainability expectations. Can you say a little bit more about that and how you arrived at that conclusion?
Yeah, very good question. We're getting into an engagement dialogue again, Matthias. So let me start off saying
that's transparency at its best, so go ahead.
That's true. No, but let me start by saying that since Matthias arrived at Bayer, we see a lot of good progress being made at Bayer. But to start with the answer regarding Bayer, I have to say that Bayer has been excluded from our sustainability mandates and funds since the Monsanto takeover. And this was due to the legal reputational risk of Monsanto. So Bayer hasn't been part of our ESG mandates for over 4 or 5 years now. However, as I just mentioned, we can see that the ESG ratings of Bayer are improving, and they're actually working on the topics we are addressing. And let's take, for example, climate change again. And Matthias already mentioned it. We have a good point in the payment system of the management, which is important, and we have long engaged with Bayer on climate, on CO2 topics, together with the Church of England pension board via the Climate Action 100 initiative. And we welcome the progress being made by Bayer with regard to setting really ambitious climate targets. They have a net zero ambition by 2050, which is really ambitious, and we expect Bayer to make further progress there. So that's really important. We always, as an investor, look at the progress and look at the future of a company.
Sorry, thank you very much. Let me go right over to Matthias so that you can continue this dialogue, as you say, Matthias, completely transparently with all of us looking on. And it's a great example, of course, of investor engagement. So what's your response to that? And what do you intend to do differently going forward?
I put myself in the shoes of one of Janne's colleagues. So he or she is trying to sell a sustainability product and basically says one of the key elements of that is Bayer. Yeah? That is, given our reputation, an uphill battle. This is something we hear from many of the investors in Germany who are basically saying, look, your reputation plays a key role. What you are doing may be going in the right direction, but you also have to make sure that how you are perceived is in line with that. So that's a big job for us to do. We can't complain about that, because if we don't manage our reputation well, the gradient, the uphill steep climb will only increase. Now, we acquired Monsanto for its innovation potential. We didn't acquire it as a boost for Bayer's reputation. So the real question for us is, can we turn crop protection in an ultimate climate business where we provide innovation that helps farmers to remove carbon out of the atmosphere, where we reduce the carbon impact, the climate impact of agriculture, and where we come up with solutions that really help farmers to be resilient against the climate change. Because other than other sectors, agriculture not only contributes to climate change, it also is at the forefront of suffering. And this change is therefore both good for the climate and good for our business. And we have to deliver against that promise. That's I think, our job. So I don't have hard feelings for many of the funds saying, well, it's a step too far right now for Bayer to be seen as a sustainability investment. But boy, do I believe that is our goal. So success looks like that we have a very different conversations in a few years.
Matthias, just one quick follow-up question, if I may, because Bayer is, of course, a publicly traded company. So your shareholders expect a return on their investment. They expect to see you also keep profits in mind. How do you convince them to support your sustainability goals and this kind of transformation of the company? And are you seeing that kind of support from shareholders?
So our shareholders would like to see two things from us. They would like us to really deliver against our potential from a business perspective. And when you look at the Bayer stock, and Janne has shared that also publicly, a disappointment that I only agree to. I mean, Bayer is, in my book, from the potential, much more valuable than what we see in the markets right now. So that's what they expect. That's a precondition. That's no longer the end game. That's a precondition. So you can see, for example, the sovereign fund of Norway. For them, it's pretty clear. They want excellent performance and leadership and sustainability. So, and that is kind of the conversation we have. Compared to a company that went through a bit of leadership turmoil at the beginning of this year, Danone. They went on a very, in my book, very ambitious sustainability journey, but then the business performance didn't keep up with it. And that's always a problem. That's why I believe the right strategic approach is unapologetic about making money with helping to make sure that Earth Day can really be a happy Earth Day again.
Thank you very much. Janne, it's sometimes said that privately owned companies have more leeway in committing to ambitious ESG strategies because they're not as constrained by short-term bottom line thinking. Do you think that's right?
Yeah, again, interesting question. I have to say that throughout my professional career as an ESG analyst, I have been assessing public-owned and listed companies. And what I learned from my early days on as a junior analyst 10 years ago is that the starting point of every sustainability assessment is transparency. And transparency is what we have at publicly listed companies by definition. And privately owned companies don't have that. They don't have public disclosures. And without transparency about goals, about reached goals, you can say whatever you want, but you don't have to put the proof, and then it can easily be labeled as greenwashing. So we have to have transparency first off when assessing a company. And let me just add, Union Investment is an active and long-term fundamental investor. So we choose to invest in companies delivering value for our clients in the long term, in the upcoming years, not in months, not in weeks. I'm sure that there are hedge funds out there that are investing just with a view on the next days, but we are a long-term active investor, and that's why we choose the long-term approach.
Matthias, the example that you gave a moment ago involving Monsanto and Bayer's goals makes clear one of the complexities of essentially evaluating ESG factors, because sustainability, of course, means different things to different people. And for example, from Bayer's viewpoint, genetically modified organisms can and should be part of fostering more sustainable agriculture. But some advocates of organic farming, of course, would oppose GMOs, and investors could regard Bayer's engagement as a liability. How do you think trade-offs like these should be handled?
Johan Rockström started a conversation, I want to say half a year ago. Actually, also in one of those LinkedIn live talks, he spoke about the climate emergency. So basically, a fast-paced, accelerating kind of change of climate. And that is also what moved BlackRock. I mean, BlackRock is always, and you talked about them as well, they haven't always been the leaders in that space. What turned this company, which is more on the other side of the Atlantic, to kind of really take climate change seriously, was just to look at the trends. And the trends are not our friend. Yeah, it doesn't matter whether you look at droughts, whether you look at insects, whether you look at crop losses that come from flooding. No matter how you put it, climate change is putting tremendous pressure on food systems. And for me, this is too traumatic to have ideological debate about some innovation. So the idea that everybody wants an mRNA vaccine in his arm, but at the same time is very picky and skeptical about using the very same technologies in crop innovation is one that I can't get clear in my head. So either you believe in the bio-revolution, then you should be open to help farmers like you help humans, or you don't believe in it, but then be consequent about it. And I know that the environmental scene is very skeptical about it, but for me, it's absolutely clear Europe needs to move on this topic. The US will be able to decarbonize agriculture because they allow all the tools to do that. Europe will have huge difficulties if they stay on a path of rejecting the latest forefront of innovation. And that's even more dramatic because the researchers that work on that reside in Europe. Emmanuelle Charpentier sits in Berlin. She got the Nobel Prize awarded for chemistry last year for working on CRISPR, on gene editing. So the idea that we have the research in Europe and then an ideological blockade is not a healthy one in my book.
Janne, maybe you can say a word about how something like GMO would figure into your rating calculations. And then beyond that, I want to ask you about how consistent and reliable rating schemes in general are when it comes to green bonds and other investments. But start out by telling us, for example, how you would look at that trade-off I talked about.
GMO is a controversial topic. You already heard the opinion of Matthias. This is I would say also a discussion we always have between the US and Europe. And Europe is way more critical regarding GMO, way more critical regarding the negative side effects we are seeing with regard to GMO than maybe other regional districts in the world. So what we are seeing is still consumer concerns around GMO, around pesticides. We still see the accusations regarding massive bee death, biodiversity loss. So this is a point for us. GMO as such is an exclusion criteria for our ESG funds, out of the risk I just said, and that's also the reason why Bayer is not investable for our ESG funds. So in my opinion, we still need further studies, we still need further development on the opinion on GMO, on the safety, and all of the issues Matthias just mentioned.
Thank you very much. So let's now widen the picture a bit and talk about ratings schemes in general, because last year the European Central Bank's Isabel Schnabel made headlines with a speech that claimed that markets are failing to correctly rate and price sustainable as opposed to risky conventional assets. So I'd like to start out by asking you, Janne, whether you agree with that, whether you would say when you're trying to get a clear picture of whether you consider a particular financial instrument truly green or truly sustainable, you feel like you have enough to go by.
Yeah, this is the most important question, I would say, and it comes down to the definition of sustainable, and there is no definition, no agreed definition of a sustainable asset. So that's the first point. We can't say this is a sustainable asset and this is a conventional asset. So the most important part is there we need more transparency and more standards there. And if I remember her correctly, and she was right on that, she says that the negative externalities such as pollution and CO2 emissions are not priced in. And to put it in short, unregulated markets are overproducing CO2 because the costs were not priced in the past, I have to say. So she's right about that, and she's also right about the solutions. And I agree, everyone, and I think everyone in the financial industry is agreeing. The solution is we need collective action on that. We need collective action by the governments, by the companies, by investors, but also by consumers, by the household. And this is also what we're seeing right now. So important steps being made right now.
Let me ask Matthias to comment on that last point that you made, namely collective action by governments. Would that be helpful for a company like Bayer as it tries to define its mission and its actions around this topic?
Yeah, absolutely. I mean, Bayer is among the companies that has asked the United States to define an ambitious decarbonization target, which I think in a few hours from now the US president will unveil at his climate leaders conference. The climate crisis, or the climate emergency, to stick with Johan Rockström, is too traumatic for us staying in old kind of conflict lines. So I feel that governments, the business community, NGOs, people who have criticized each other need to work together much more than ever before. So for the next government in Germany, the question is no longer if we want to decarbonize the country. The question is how, and the question is whether we achieve decarbonization without deindustrialization. Because if the decarbonization leads to huge social unrest and deindustrialization, people losing their jobs, you will get like what you got in France with the Yellow Vest movement. You get an opposition that is deeply entrenched. If in the United States, the Republican Party chooses not to support decarbonization, we are always one election away from a stop and go. And that can't happen in my book. So the United States had huge consensus across the political spectrum during the time I was born, at the early 1970s, on sustainability. And we need to dream to come back to this kind of consensus, because if not, we have a problem. For me, President Xi joining the Climate Leaders Summit is not only a sign of respect, but really an important move, basically saying the US and China will compete like hell, but when it comes to climate, they want to work together. And that's the spirit I think we need to also exercise between the business community and the political community.
Let's dig a little bit deeper on how you set a change process in motion. And for that, I also have an audience question that's come in, and it is this. In the case of Bayer, there are many issues that lead to criticism, such as environmental impacts. How are you planning to also transform your very core business practices? And that, of course, relates in part to the question that I asked you a little bit earlier, but Matthias, but perhaps you can say a little bit more about how you see this shaping your business model going forward, and particularly whether you think that in that balance between profits on the one hand and environmental engagement on the other that you talked about, whether you think you're going to find that there are some business areas that are a clear no-go, that are on the other side of a red line.
Yeah, so let me talk about an example that is not Bayer, but VW. VW has the largest corporate R&D budget of any German company, and the second largest R&D budget of companies in the world. So they are clearly they have over-invested behind that, and their R&D budget is geared towards decarbonizing their core product, and that is the car. Did they kind of come to that without pressure? No, they had a huge rendezvous with reality during the diesel scandal in the United States. But they ended up making that shift. So for me, one of the most important decisions is to make sure that your R&D budgets, which determine the future of your company, are designed to solve future problems. Because otherwise, all you do is you just prolong the agony of that shift. Yeah. And in the Bayer case, I wish I had to talk about 17 billion, but I think 5.5 billion is still a lot of money. Yeah. Our R&D budget in agriculture is 2.5 times as big as the R&D budget of the Indian government in this space. So it's really a huge lever we have. And that's why one of the most important conversations for me, both in terms of our startup investments, our investment fund is making, as well as our traditional R&D budget, are we inventing the future or are we prolonging the agony? This is the biggest conversation outside the public space that is happening in the company. And this is the biggest shift necessary. And by the way, we got just feedback on our pharma R&D budget, where the Access to Medicine Index told us you have made great progress, but we'd really like to see progress in gearing your R&D euros towards including more people in access to health. This is the kind of feedback that we are now listening to, like we listened earlier on remunerations, to ideas from Union Investment and others.
Thank you very much. Let's talk a bit more then about that dialogue process that you've both mentioned with investors like Union. And Janne, there's an ongoing debate about whether investors who don't agree with a company's approach should work with its management to try to spark gradual ongoing change, or whether there comes a point where you simply have to divest yourself of that company's shares. How do you see it? And where is the point where you would say, okay, there's no alternative, we have to get out?
Yeah, I think this is one of the most relevant question we can ask the asset manager industry. It's the question whether you should sell the share or whether you should engage with the company. And I have to say with certainty that Union Investment always tries to have the dialogue first, to engage with the company, to put the company we invest in on the path to transformation, to a greener economy. But of course, there are certain business models that we don't invest in at all. So that's very important. We generally do not invest in, for example, companies that are involved in nuclear weapons, chemical weapons, landmines, cluster bombs. We have excluded companies that are involved in coal mining and coal-based power generation above a certain threshold, which was huge for our industry. And that's an important point. But before divesting, we always try to engage with the company. And depending on the matter, depending on the engagement that might be successful or not successful, we then decide if we should exit the share. But it's always the last step. So we always try to engage first with the company.
And let me ask Matthias to also talk a little bit about that process. Let's say that you've heard from Union Investment or from some of your big shareholders that they're looking for change in a particular area. What happens next with that recommendation? How does the process work? And what kind of leverage does that give you in your role as the guardian of sustainability at the company?
So we regularly are in interactions with investors. I'm happy to be part of a group of people that does a so-called governance roadshow where the ESG topics are front and center. That is usually chaired by Norbert Winkeljohannes, the chairman of our supervisory board. And we had a really difficult last year, as you may notice also in our endemic stock market performance. So at the lowest point of that, Norbert went on a really extensive listening tour. I vividly remember it because for me it was night shifts. Yeah, so I got up in the middle of the night to be part of that. Virtual jet lag at its best. But it's really valuable because not only do you hear directly what's going on, you also are able to think about, okay, what do we need to do differently? And that is what's happening, not only in the sustainability space. The good news is I don't need, given the strategic intent the Board of Management has agreed to at Bayer, I don't need criticism to move us into the area of sustainability, dare I say anymore. Yeah. And my advice to companies who are on the fence, don't wait for the moment where the public forces you to do something. That's usually a minute too late. Decarbonization is basically name of the game. And frankly speaking, Fridays for Future was asking for companies to stick to 1.5 degrees as a target for their decarbonization and not try to chicken out, are probably more realistic than most others who talk about climate change. I believe the 1.5 degree path is without alternative. Currently, there are only 400 companies in the world believing that. I think it needs to be 400,000 to really make a difference.
Thank you very much. We have another audience question that just came in, and I'm going to put it to Janne, but I'm going to attach my own question to it as well, if I may. So here's the audience question. A student from Uppsala University says, I would love to hear more about the ethics around some of these decisions, investment decisions, GMO and regulations. My addition to that question would be that, Janne, you just talked about some of the areas that are redlined for you, where you say we don't invest in coal, we don't invest in some fossil fuel areas, and we also don't invest in certain kinds of weapons. The latter would be actually in the category governance factors. In that trade-off between environmental, social, or not trade-off, but amongst these environmental, social, and governance factors, we often tend to focus on the environmental because of the climate change issue. Would you say social and governance issues get enough consideration? And how do you see the ethics around that?
Yeah, very good question. First of all, I'm very happy that we have a student from Uppsala watching. So welcome to the audience. Most important, I'm not a big fan of separating environmental and social issues. I know that it's in a discussion right now, but I'm not a fan of that, and here's the reason why. Climate and environmental issues are deeply social questions for me. Climate change is affecting human health, is affecting energy, food, and water security. So every solution, every measurement helping to stop climate change does have a long-term social impact. So very important to keep in mind while talking about environmental and social issues. And let us not forget, and I think Matthias already mentioned that, climate change is disproportionately affecting poor people in low-income communities in developing countries around the world, even more than the higher income companies. So very important. Having said that, and coming back to the question, is I agree that ESG assessment of a company has to take into consideration the social and the corporate governance mechanisms and management systems of a company to have a clear picture of the whole company. Matthias just mentioned we are also in a dialogue with the supervisory board of Bayer talking about corporate governance standards, and that's a very important point because you always have to have every pillar, the environmental, the social, and the corporate governance pillar. So quite really important to have that in mind also in the discussion around GMO.
Thank you very much. Let me perhaps ask you just one brief follow-up, Janne, and maybe Matthias also wants to comment on this because we are slowly getting to the end of our window of time, and it's certainly going to be a big topic around the climate summit that's about to start right now in Washington, or at least it's virtual. So of course, many of the 40 people taking place will be joining just as we are online. But a big topic is going to be whether it's enough to let money talk in the way that we have been discussing, or whether we need sticks as well as carrots, meaning worldwide carbon taxes. It's something that we used to talk about in nearly every discussion, and we often don't anymore because people see it as extremely hard to achieve. What difference would it make in your view, Janne?
Well, certainly a good question. You not always hear an investor talking about taxes and the opportunities of a tax system, but with CO2, it's certainly true. And coming back to my point of negative externalities, we as investors, we need a framework, and also the companies we invest in need a framework of how to do business and how to price in externalities. And the CO2 pricing, of course, helps there. And you can already see that being priced in and seeing that at the company valuation. So important point there. And the other one I already mentioned that is that, of course, and it's an old one, we need mandatory disclosure, standardization, and independent control of sustainability reporting. And this goes to the financial accounting topic. We need the same standards for sustainability as we have for financial disclosure, so the investors can really rely on the data being reported.
Matthias, do you have thoughts about how a CO2 price would change the parameters for a company like Bayer, if at all?
Yeah, I also have like personal experience as a politician to introduce a very high price on carbon by way of campaigning for 5 Mark, which is like something like €3 in 1998 per liter of gasoline. Yeah, that was a green campaign slogan that ultimately the party was able to explain in a way that ensured political survival. But boy, was that an uphill battle. Yeah, so the American Petroleum Institute just suggested to the Biden administration, why don't you put a price on carbon? And of course, that's a bit of a tricky thing. They know exactly that the political challenges, ramifications of that will be very high. So for an incoming administration to basically tell fairly poor people in the United States who rely on fairly gas-guzzling cars that now everything's getting very expensive is a political gamble that even a very brave administration wouldn't make. So being a pragmatist, I have a simple compromise. If you as a company want to decarbonize, you need to put an internal price on carbon. In the case of Bayer, we established a price of €100 per ton. That means that if you are operating a site, let's say in Spain, and you have to decide to invest in either technology that consumes more or less energy, you can factor in your investment decision a really high price on carbon without this becoming a huge political debate. And I believe that companies that are serious about climate change and decarbonization should introduce a carbon price of €100. And I would like to see the investment communities asking for a measure like that.
Thank you very much. We're just about at the end of our window of time. So let me ask both of you, coming back to something we mentioned at the outset of our discussion, whether we're seeing a sea change and what you're observing amongst those around you. So for Janne, the question would be, do you see a difference between younger investors and older ones? Matthias talked in the beginning about the fact that he does see a generational difference. Are you seeing a different awareness and a different willingness to put money on what's good for people and the planet rather than only looking for the biggest return on investment?
So to start off, we definitely see that sustainable investment is becoming increasingly popular. It's a growth topic, and we are only at the beginning of a long-term trend. So it's a mega trend in the finance industry. I can only speak for Germany. We saw a growth of over 96% in sustainable assets, and there you can see that the people are actually putting the money where the mouth is. So they actually are investing sustainable. Talking for Union Investment, every second euro coming in right now is going into sustainability funds. So that shows you the importance of sustainability, of ESG for Union Investment, also for the financial and capital markets in Germany alone.
Thank you very much. And over to Matthias. Matthias, you can also speak to a general shift in attitudes if you like, but I have a specific question, and it relates to remuneration. You also mentioned that remuneration has been a topic. And in fact, you have integrated at Bayer sustainability goals into the long-term remuneration payment, the salary plans for your employees. Do you think a time will come when people respect planetary boundaries on their own and don't have to be incentivized in this way?
I would answer the question as follows. My experience in business is that business leadership teams are really grandmasters in balancing different KPIs, growth and profit, for example, investment in R&D versus investment in marketing. And what has been missing is that planetary boundaries were included in that conversation. They were like normative conversations. People like me came with, like, in this case, a green finger saying, hey, you also have to take care of the planet. By putting that into the consideration set, you basically use the muscle those leadership teams are used to exercise in a way that most people couldn't. It's a real gift of talented business leadership teams to do that. And I've seen that playing out at Bayer. So for me, I'd rather have the planet at that table than to be like a normative kind of precondition upfront or just a regulatory thing everybody has to do. And as far as I can say, the impact and sustainable investment trend, I here also believe that, yes, there will be sustainability products, but I think everything needs to be more sustainable. The change we are talking about is of such a magnitude that you can't kind of play like in a little sidebar with sustainability, but about what's needed for real impact investments. We have a talk next week during or before our AGM, where also Klaus Müller from the German Consumer Protection Association is joining, because they have a very clear idea as to what kind of standards need to be adhered to for a product to be called really a sustainability product. And that dimension we need to include in the conversation.
Thank you very much. We're really just at the very beginning, I think, of that journey of trying to set out the standards that make this measurable, that make it something concrete and something that can be benchmarked. So it will be very interesting to see how that develops. Many, many thanks to both of you for this very interesting dialogue on Earth Day 2021 and for talking to us about how you see the role of investors and the financial sector in achieving the motto of Earth Day, namely to restore our planet. And I'd also like to thank our audience very warmly for your attention and your contributions to our discussion. We'd love to have you join us on our next webcast. It will be on the 19th of May, and we're going to focus on a topic we mentioned a little bit earlier, biodiversity. So we'll be inviting a guest to discuss with us that priority. And meanwhile, until then, I wish everybody a very good springtime, and stay healthy and stay safe. Goodbye.
Thank you so much.
Thank you very much.